Albertsons stock fell almost 25% in one day. That's the worst day in the company's history. It wasn't a scandal. Their own chief executive admitted shoppers are now pulling back. When the company that sells you dinner says the customer is breaking, that's a confession. Here's the full story and how to read your next grocery bill.
The Albertsons on the corner is open tonight. Nothing about that building tells you anything happened. But 8 days ago, the people who own it told Wall Street their customer is breaking. Nothing about that building tells you anything happened. But 8 days ago, the people who own it told Wall Street their customer is breaking. And by that afternoon, the stock had lost about a fifth of its value. That gap between what the building looks like and what the filing says is the whole story tonight. So here is what she actually admitted, the two forces that put her there, and one date this October that decides how much worse your own grocery bill gets. Last Thursday, the 23rd of July, Albertsons reported its first quarter and cut its outlook for the entire year at the same time. Those two things almost never happen together. Susan Morris, the chief executive, put it like this: core grocery faced increasing pressure from softer industry unit trends and a more cautious consumer. That is careful corporate language, so let me translate it. The part of the business that sells you food is getting worse, and the reason is you. The number underneath that is called identical sales, which just means how the same stores performed against the same quarter a year earlier. Identical sales came in down 0.8%. Then the company told investors what it expects for the rest of the year, and the guidance flipped from roughly flat to a decline of as much as 1.5%. Its own estimate of yearly operating profit came down by about $300 million. The earnings outlook was cut by roughly a fifth. Shares fell as much as 24.5% during the session and closed down about 22% at $11.40, a new low for the year. The shares were on pace for their worst day on record, as Reuters put it at the time. 2,200 stores carry that name or one of its siblings. Safeway and Vons are two of the core retail brands. Jewel Osco, Tom Thumb, 34 states. And right now, tonight, somebody is standing in a kitchen writing a shorter grocery list than they wrote last year. Not because anything on the shelf got cheaper, because the money ran out before the list did. That is what a more cautious consumer looks like from inside a house instead of from inside a filing. If you have caught yourself putting something back on a shelf in the last 6 months, you already knew everything in this report. The company just wrote it down. Now here is the part the calm voices will tell you, and they are not wrong, so I want you to hear it properly before I take it apart. Two things inside that quarter had nothing to do with groceries. A federal drug pricing program knocked about a full percentage point off the comparison through the pharmacy counter, and falling egg prices took another half point. Strip both of those out, and the company's comparable sales were actually up about 0.7%. On top of that, Kroger, the largest traditional grocer in the country, reported the same month and held its full-year guidance, grew its traffic, and spent about $1.7 billion buying Giant Eagle. Its chief executive, Greg Foran, said plainly that shoppers are not buying less overall. They are just shopping more deliberately. So the calm read is that American grocery demand is basically fine, and one chain lost a fight. On the evidence, that is close to true. Albertsons is losing customers, and Morris said out loud exactly where they went. Walmart, Amazon, Aldi. Here is why that reading still breaks. Nobody left for a nicer store. They left because the basket stopped fitting the budget. And the reason it stopped fitting is not a mystery. Between July of last year and April of this one, the number of Americans receiving federal food assistance fell by more than 4.5 million people.
Hey everyone, sorry to butt in real quick. If you want to change your money mindset, I put together an entire course from my wins and losses. It's called the Money Mindset Mastery Program. Links down below. People usually expect to spend $1,000 on something like this. I have it at an incredible value. Links down below. Check it out. Now let's get back to the video.
That is about 11% of everyone on the program gone in 9 months. It fell in every single state except Alaska, by 5% or more in 44 states, and by 10% or more in 23. Between July of last year and April of this one, the number of Americans receiving federal food assistance fell by more than 4.5 million people. That is the steepest decline over that short a period in nearly 30 years. A finding from the Center on Budget and Policy Priorities, which assembled the figures from federal and state data. And here is the line that matters most in this whole story. Unemployment has held near 4% that entire time. So this was not people finding jobs and no longer needing the help. The rules changed and the people fell out. Roughly 1 million children lost benefits across the 19 states where the data exists, and the national figure is likely above 1.5 million. Those households did not stop eating. They stopped eating at Albertsons. Terry Shoemaker at the Arizona Food Bank Network described her organization as operating in emergency management mode. Dennis McDonough, who runs Feeding America, says food banks are now buying food at record levels. That is how it happened. 4.5 million people were moved out of the paying grocery market by policy, and a chain with 2,200 stores recorded it in a quarterly filing as lost traffic. The prices are not helping the ones who stayed. Beef is the worst of it. The American cattle herd is the smallest it has been in 75 years. And the Agriculture Department's latest outlook has retail beef and veal climbing about 10.7% this year, with beef already sitting almost 12% above where it was a year ago. Ground beef averaged $6.75 a pound this spring. Eggs are the one real relief, down about 30%. And that fact is quietly distorting every sales comparison in the industry. More than half of Americans now say they are switching to cheaper brands, and the tariff costs that grocers mostly swallowed last year are arriving on shelves now. There is a version of this that already played out, and it is worth telling straight rather than dramatically. In its annual report filed in March of 2017, Sears wrote that its historical operating results indicated substantial doubt about its ability to continue as a going concern. Those are the exact words from the filing. The stock dropped more than 12% that week. It was nothing new, a Moody's analyst said at the time, because everybody already knew the losses were bad. And there is a wrinkle worth admitting, which is that a new accounting rule had just taken effect requiring companies to say that out loud. So the language was partly compliance rather than confession. 19 months later, Sears filed for bankruptcy. Albertsons is not Sears. It is profitable and earned $84.7 million last quarter. The useful part of that comparison is the timing. The distance between a company admitting its customer is weakening and the consequence actually landing is measured in quarters. And the entire way down, somebody is explaining that it was already priced in. Watch what the company did the morning after it said all this, because that is the real tell. Albertsons announced a reorganization it calls ACI Edge. 11 regional divisions collapse into 4. Buying for the middle of the store gets centralized. The company expects about $200 million a year out of it. It is spending $50 million to get there, and most of the benefit does not arrive until next fiscal year. That is not a growth plan. That is a company cutting to defend the position it is losing. A retirement notice for its chief financial officer was filed the same day. It also changes what you see on the shelf. Fewer regional buyers means less leverage with local suppliers, fewer local brands, and more of the same national items at national prices. Meanwhile, Walmart has already cut prices on 7,200 grocery items this year, 30% more rollbacks than last year. Albertsons is not moving fast enough on price to pull shoppers back, in the judgment of analysts at BMO Capital Markets. The savings arrive next year. The price war is happening now. Which brings us to the date. On the 1st of October, the federal government cuts its share of what it costs states to administer food assistance in half, from 50% down to 25%. The states absorb the difference. From October of next year, some states begin paying for part of the benefits themselves for the first time, between 5 and 15%, depending on how many payment errors they make. Nearly half of all states will owe $100 million or more in the first year alone, by the estimate of Katie Berg at the Center on Budget and Policy Priorities. States that cannot absorb that will tighten eligibility further, which means 4.5 million is not the end of the number. It is only the part that already happened. So here are 3 things worth watching at your own store starting this week. Watch the promotions. If your Albertsons or Safeway suddenly starts running deeper weekly deals this autumn, that is not generosity. That is a company buying back traffic it already lost. Watch the shelf. Count how much of an aisle is store brand compared with 6 months ago. That is the private label pivot arriving where you can see it. And watch your own receipt. Take the same list you bought in February and price it today. Not the headline inflation figure, your list. That is the only measurement of any of this that is actually about you, and it is the one nobody publishes. The store on the corner will be open tomorrow. Lights on, doors working, peaches by the entrance. That is what makes this so hard to see. Nothing collapses. It thins. The brands narrow, the deals get louder, the basket gets smaller, and one morning you realize you have been shopping somewhere slightly worse for slightly more, and nobody ever announced it. 4.5 million people already walked out of this store. When the 1st of October arrives and the states start doing their own arithmetic, who is next out of the aisle? The American grocery cart shrinks, one cautious consumer at a time. Economic ninja is out.